welcome to this panel on the state of the FinTech industry as part of the Virtual Finance Festival. I'm Ellie Duncan, Head of Content at Open Banking Expo, and I'm excited to have with me a great panel today, starting with Harjit Moore, CEO of FreezeDebt, Richard Carter, Managing Director of Equiniti Credit Services, and Antonia Locke, Head of Strategic Initiatives at Nude. So welcome all, and before I kind of introduce the topic, set the scene and then get underway with a few questions for the panel, I'm going to ask each of you to sort of introduce yourselves a bit more. So let's start with you, Harjit. If you could tell me more about your role, about FreezeDebt itself, and where it sits in the FinTech industry, that would be great.
Hi, so as you've mentioned, I'm Harjit, CEO of FreezeDebt. So FreezeDebt is the first ever debt advice and solution mobile app. And really, it's just using technology to speed up and make more efficient the debt advice process. At the moment, the industry is run on call centres, to be fair. If you look at Step Change, 1,500 person call centre, they've just made some redundancies. And it's a long process, and we just use technology to speed that process up, make it easier for the consumer. Ultimately, money is a very hard thing to talk about, and debt's even worse thing to talk about. So what we try to do is create an app that 2 o'clock in the morning when you can't sleep, you can download an app and get to a point where you can see a solution and understand what an IVA is, what debt relief order is, what bankruptcy is, and what kind of impact it's going to have on you before you make that decision. Compared to, like I said, the industry at the moment, you're going to have to sit there and do a 45-minute to an hour call where you do a fact-find income and expenditure to get to that point. And that's very daunting and a long process to do.
Thanks, Harjit. And Richard, the same to you, really. Can you tell us more about your role and where you sit within the industry?
Yeah, thanks very much. So I'm Richard Carter. I'm Managing Director of Equiniti Credit Services. We're a digital loan management software provider. So I've been providing loan software for over 25 years now. And our clients range from telcos, some of the high street brands, through retail banks, to independent lending organizations, motor finance companies, etc. So we provide everything from the origination capability all the way through underwriting, risk assessment, loan payout, all of the loan management, and then into the arrears management where necessary as well. So we cover the end-to-end activity there. And of course, given the amount of time that I've been in the industry, I've seen buy now, pay later in its current form come, I've seen it in previous forms, and various other financial products that have come to market that may have seemed like they were going to have desirable impacts for the UK consumer, but then have tended not to do in different places as well. I'm sure we'll get onto that when we get into the debate.
Yeah, absolutely, we will. And Antonia, let's hear from you about a bit more about your role and Nude as well.
Yeah, of course. Hi, I'm Antonia, Head of Strategic Initiatives at Nude. We help young people build their first home deposit. So slightly different way to come to the conversation. We offer a lifetime ISA where you can save or invest, and then we help you get to your deposit goal, hopefully quicker than you would without any other sort of information. I've worked in FinTech for a little while. I was at Funding Circle during their big period of growth, so sort of small business loans. And last year I did an alternative MBA with Founders Academy, which was born out of Founders Forum, learning all about different areas of tech. And that's when I sort of realized I was super passionate about financial well-being. So really interested in how we're going to discuss this topic today. If I'm honest, it's something that sort of scares me, but there's a huge proportion, I think it's 45% of 18 to 34-year-olds are using buy now, pay later. So it's definitely helping young people in a certain way. And yeah, really interested to hear everyone's thoughts on it today.
That's great to hear. Thanks, Antonia. And yeah, as I said, this panel is all about sort of the state of the FinTech industry. And I guess just to set the scene a bit here, you know, we've seen a proliferation of FinTech firms and apps, making it much easier for consumers to access credit and various alternative forms of lending. Now, at the same time, consumer finances have obviously come under enormous pressure during the pandemic, and perhaps unsurprisingly, we've seen kind of consumer borrowing rise, but maybe more significantly, consumer credit repayments have dramatically fallen over the past year or so. And I think another, I guess, consequence of the pandemic has been this acceleration, hasn't it, of sort of online shopping, e-commerce, digital banking, all of which has led to the rise of, as you pointed out, the buy now, pay later market. And I think it was a recent report by WorldPay which found that BNPL is expected to account for 10% of all UK e-commerce sales by 2024. So that's quite a significant stat, I think. And really my first question is all around this idea of, just because we can lend in a certain way, does that mean we should? Richard, let's come to you first if we can. I know it's made, all of these digital apps have made lending possible at the touch of a button, but is that a good thing or not?
Well, look, I think it's all about unintended consequences here. So buy now, pay later has been around for decades. I remember when I was younger, we were buying items for our house. You buy something on a buy now, pay later scheme. You've maybe got no payments for 6 months. So you buy now, you pay later in 6 months' time, and you either pay it all off or you pay a monthly instalment, which is interest bearing. And I guess everybody at that point recognised if they were buying something for a few £100, like some brown goods or white goods, you've got that payment coming. You're using it effectively to smooth some of your cash flow, and you kind of make a mental note that you're going to have to pay this off at some point in the future. Now, the world has clearly changed, because historically it was quite expensive to originate a new loan and then to service it. But of course, technology's come into place now where there's the cost of origination in terms of from the technology perspective has reduced so dramatically that the new buy now, pay lenders are able to provide that facility for transactions as low as £40 or £50. And that brings it right into the mainstream. So it's no longer the brown and white goods that are the considered purchases. It's now the new pair of trainers or a dress or a handbag or something else that you go out and buy. And I think it's a bit like buying on a credit card in some respects, that it's just an electronic transaction that happens. And because we are increasingly disconnected from hard cash, all of us, you don't really see it. So I think my comment would be that it's kind of an unintended consequence of the ability of tech to service that lower level more cost effectively. So I don't necessarily think it's a bad thing per se. It's just something that we need to manage. Now, one of the other implications here, of course, is that these fall outside of the current Consumer Credits Act by virtue of them being interest-free and paid off in less than 12 months. And again, it's another one of those unintended consequences, really. That exclusion in the CCA was put in place for a different financial product, almost for a kind of a trade credit capability. And now that niche, that gap, if you want, is being exploited by a number of lenders to offer something that it wasn't intended for. And I think the regulator needs to step in, as indeed they will do, and just put some tighter regulation around it.
Yeah, I think we'll definitely come on actually to talk about the regulator's role in all of this. But for now, Harjit, can I bring you in? And you're coming from a slightly different perspective here, I guess. So what are your thoughts?
I think for us, it's we start seeing it trickle through for the last, we launched in 2019, and about maybe 3 to 6 months after we launched, we started to see the buy now, pay later stuff, especially with somebody like Klarna. They're the biggest. I think for us, it is that, for me, being in fintech as well, it's like 90% of all fintech is based on lending, or probably more than 90%. And it's one of them things, like if you look at anything that's new, Uber or anything, you have this massive rise at the start where everybody sees the benefits. And when you look at it, I go on a website, I can spread it over 3 months and I can afford it. And it works. And for the majority, it does. But that's when you start coming into problems later on for the people when it's start abusing the system, or there's loopholes that you, as a tech company, you might not have thought of. Then you've got the government and the regulation that sits in. Then you get this period of, okay, it's gone too far, we need to bring in a bit like when you look at the payday lenders when they had a blow a few years ago, and then the regulator had to get involved and bring it into line. I think that's what we're seeing with the buy now, pay later stuff. It is, for me, a lot like the payday loan stuff. It's got this massive rise, and people are using it, and for the majority, it's a good thing. But if you look at this, everybody's in the market. Even somebody like, I think PayPal, they have one that goes over 12 months, interest free. So even if you think something like PayPal and everybody uses PayPal and they're offering it, it is a massive market. And it's all, you understand, it's only a massive market if there's demand for it, so it works. The issue is around the regulation. And sometimes where my frustration is that thing about just because we can build it doesn't mean we should. Like I don't like a Marvel superhero. If you've got the power, you've got to have the responsibility kind of thing. And the responsibility kind of always comes later on. And in that meantime, a lot of people are going to get hurt. And we see that where it's not a consequence. It's not like it's intended to do, but it happens. I'm always forward for new technology, moving things forward, making things faster, more efficient. And one of the things that we've always spoken about in finance is access to finance and giving people who need finance access to it. So technology gives you that. As Richard touched on before, origination, the amount of paperwork you have to do a face-to-face meeting, piles and piles of paperwork to sign, send it off, maybe a few days later you get a reply. This is all instant, which is great, but the bit that's missing is that regulation and that safety to say, like, okay, is this for everyone? And one of my biggest issues with buy now, pay later is there's no income on spending verification, so you don't know, there's no affordability done around it. It's okay, you're on ASOS, buy now, pay later. There's no affordability around that. I think that's where it's dangerous, because at that point you don't know that person if they're already maxed out on 3 credit cards, they've got a loan, they've already took 2 buy now, pay laters, but because they're in that kind of weird grace period, it's like, okay, you lent too far. And that's where the thing is about the technology is great, but there needs to be some restrictions on it.
Yeah, Antonia, let's bring you in here, because obviously you spoke about Nude and what you offer there. So obviously that is giving consumers access to finance, but obviously totally separate from the buy now, pay later market. So what are your views on sort of tech, allowing that kind of ease of access and I guess still being able to check affordability and all those sorts of important things?
Yeah, I think Richard made a really good point when he said it's not new technology, as you mentioned, buying a sofa and being able to pay it off over a certain amount of time. And Harjit mentioned about the education piece. I think we're seeing huge demand for it because it's almost so easy. And I think it's, people just getting people into the mindset of thinking, would I buy it or pay so much for it if it wasn't buy now, pay later? There's, I think, probably lots of good use cases for it. If you're a low income family and you need a new washing machine and you understand the risks and paybacks and all that kind of thing, it's a good thing. I know one of my colleagues uses it because it's hard to know on ASOS what size you are. So she buys multiple sizes and then pays back, but she understands what she's getting into. And I suppose the challenge is if you're signing up, there's a soft or hard credit check that is being done. And in the moment where you're just thinking, I'd like this new top to go on holiday, it looks very easy. It's almost quite hard now to pay on some websites with your credit or debit card. And I think that's where we need to kind of educate people and make sure it's not necessarily inherently bad, but as long as people know what they're signing up for and then also can afford to repay, I think is a huge point. I think I was looking on the Citizens Advice Bureau just before this, and it said that a quarter of people who've signed up for buy now, pay later then can't afford their bills or rent or to pay for food, which just seems like we've got to a crazy position. So I think that there needs to be a lot of work around education and also for it not to feel like just a bad option, to see it in a balanced way, I think would be my view.
Yeah, and that's really interesting. You raised some really important points there, and I wanted to move on to talk about perhaps the ethical side of things a bit more, specifically around gambling apps, actually, which I know is a step on from what we've been talking about and a slightly different area, but again, we've seen them become sort of readily available, and certainly over the past year or two, I for one have noticed lots of adverts for gambling apps on TV. So Harjit, let's hear from you on this and your thoughts around the ethics of that side of the fintech industry, if you like.
Again, it's one of them things. In moderation is fine, bit of gambling, if you can handle it. It's that small part of people who have an addiction and go too far with it. And they're the stories that you see in the newspapers that are sensationalized. But like I said, there's GamStop. There's a lot of stuff around that the industry has agreed to. And we see a lot of it as being in debt. We see a lot of people who are in debt because they're gambling. And then that causes issues in debt solutions, because you can't really take a debt solution if you're gambling, because you're spending money on things that are not your debts, which is always difficult. But for me, again, looking at the power of technology, something like open banking, I think the gambling apps should look at that and connect open banking up and see if somebody's abusing gambling and not give them the option to gamble more. They can already see that in the app. I think that, again, for me, is where it really needs to be, is, okay, the apps, again, are a good idea, but again, regulation and themselves being a bit more self-regulated and using technology in the right way, not having this issue where, okay, you've got one gambling app and I'm kind of maxed out, but I'll download another one and start again, and then download another one and start again, until it gets to a point where I can't control it. And I think that's where the power of open banking for me comes in, where when you connect and you open in a new gambling app, you should connect to open banking, and it should look, right, if there's any gambling on there, how much is it? Is it sustainable compared to your income? You're doing too much, we're not going to give it to you. And I think that's, again, a good use of technology. The gambling apps have got there. There's a place in the market. Now it's time for us to go to that next stage where, right, the technology's there, let's use it properly. The question is if they will. Yeah,
Richard, what do you think to that? I mean, do you think they obviously could do, couldn't they? But will they? And what needs to happen here for those to become a little bit safer, if you like, for consumers to use?
Yes, I'm not particularly close to gambling, to be honest. So I can't comment directly on what they do, but I'll just draw the parallel with Payday Lending, if I can, because when Payday first came out, I think, like every other product, whether it's Payday or PPI or gambling or anything of that nature, for the majority of people, it's fine. If they understand what they're getting into and they manage it, then there are no problems. The issues come where someone gets into that, I guess, in a debt context, a cycle of debt, or maybe a cycle of gambling, and the next deal is going to get me out of the problem that I'm in. And I agree with Harjit that open banking has a role to play there, because it gives you that true access to the dynamic bank account to see exactly what's going on as at right now. As far as I'm aware, there's no central register for gamblers in the same way that there is for the credit reference agencies. And even the CRAs in their own right on Payday Lending, they were reporting monthly where people were taking out loans on a daily basis or several loans on a single day, and then the systems were unable to catch up. So I think open banking provides a tremendous opportunity to reduce some of the risk for those individuals. But of course, they've got to opt in. And I think if you consider, say, Monzo, the first people with the initiative to put a gambling stop on their cards, and then some of the other providers did thereafter, there are some consumers who recognise they've got a gambling problem and kind of opt out from it. But you're still going to have to use some data to get to the ones who have not recognised that they have a problem.
Okay, I want to move on to talk about consumer attitudes towards finance a little bit, and that's off the back of some findings from a survey that FreezeDebt did. So I'm just going to pull out a few of those highlights now. And that survey found that 60% of Brits don't regard money owed to buy now, pay later as sort of real debt. Over half, around sort of 54% of Gen Z and millennial consumers use BNPL services up to 4 times every month, so approximately once a week. And the survey also found that 46% of Brits admitted that they didn't care whether BNPL services were regulated or not. So I guess my question is, are buy now, pay later services contributing towards a rise in problem debt and these sort of skewed attitudes towards finance among younger generations? Can I come to you, Antonia?
Yeah, absolutely. I think lots of the stuff we've been talking about is we believe that the consumer should be protected, especially when they can't protect themselves. And especially if you you haven't managed to really understand what you're signing up for. I think that fintechs and the regulator have a kind of job to do there to help people make the right decision. I think I read that a customer's order value is said to increase by 55% if they use a buy now, pay later. So again, back to that question, would I be buying this if it wasn't for buy now, pay later? I'm sure everyone on this call has done their compliance training and knows that whenever you set out a marketing ad or anything, it has to be fair, clear, and not misleading. And that would be my challenge, is there's a lot of money into creating influencer councils and things. I know lots of these big buy now, pay later have kind of brought people in to help spread the kind of good word, but just making sure that it's balanced and it is it's fair, clear, and not misleading in what you're getting into. You understand there might be a credit check. If you understand it and you know that you can pay it back, to Richard's example of the sofa before, that's all right. But I think we need to protect people. It's a bit like, I suppose, at Nude, once we help people save the deposit, they'll then get a mortgage, and there's an option to get a range of mortgages. If you go for the top end and then you can't afford to eat or do anything, you're not in a brilliant position. So I think this kind of comes into that, that we need to protect customers who can't protect themselves.
Thanks, Antonia. And Harjit, you obviously conducted this survey, and so were you surprised at the findings? What do you think to those?
Not really, because I have a deeper opinion on this. Because for me, when you look at the millennials and you look at millennials' attitude, young people's attitude towards money and debt is very different. I'd say definitely from my generation. I'm 41, and probably from Richard's generation. Is growing up, you only borrowed when you needed something, usually something big. Very few people had credit cards. Very few people had new cars. Everything was used. My mom always said you only buy what you can afford. And that was the world we lived in. And I think, like, when I went to university, money changed for me at that point, because then all of a sudden I live in my overdraft. The government gives me, I take my student loan, and everybody around me is in the same way. And then when I finish university, I get my first job, and I'm still in my overdraft. But zero for me is whatever my overdraft balance is, and then zero actually on my balance is when I get paid, and then it works all the way back down. And everybody around you and your peer group all kind of lives in that way, and you're used to having credit cards, you're used to being in your overdraft, you're used to borrowing, and all of a sudden money doesn't really mean as much as it did to older generations. And I think that's the bit that's missing, and that's why people look at something like buy now, pay later, because it's such a small amount. Think, it's 50 quid, it's 60 quid, it's a pair of trainers, a couple of t-shirts, it's on shopping, fashion websites and stuff like that. It's frivolous, it's wants and needs. I don't really need it, but I want it. And then that kind of fits into this world that we live in at the moment. So for me, it goes a bit deeper. For that, it's about people's attitude towards money, and then more as a government and an education system and at university, what we're doing about that. Where everybody thinks it's okay to live like this, and I'm not really too bothered about interest rates. I'll pay it back when I pay it back, kind of thing. This is the world that we live in. So I think there's a deeper problem that we're stepping into. And if you look at the stats in the bank, the stats on how much we're borrowing, and every year we're increasing, and that doesn't include stuff like mortgages. If you just look at personals borrowing on loans and credit cards, it just keeps going up and up and up. Part of that is technology. We make it easier to borrow, but at the same time, it's our attitude towards borrowing. It's okay to put your holiday on a credit card. It's okay to go get a second car on car finance. It's okay. There's no real consequence to that. There's no real thought to that. It's like money's just one of them things. It's digital. It's some numbers on a screen. That doesn't really mean anything. I get paid. We pay off. We live this way. And this is how we do it. So for me, I think that we are going down that road further and further. Just not even in this country. I think in the whole world, and money's becoming cheaper. And we live our lives. We live a life on credit. That's just the way it is. And I think we're going to touch on it later on. If you look, we've had an increase in borrowing since the end of lockdown, and that's kind of alarming and worrying, because we survived 18 months without needing that money, and all of a sudden we're back to going out. And for me, that's worrying, because you need to then borrow to sustain your lifestyle, to go out and eat and catch the train and come to work. Why has my borrowing increased? We still can't go on holidays yet, so where's the money going to? So yeah, so that's my opinion around that.
I hope you don't mind if I jump in. I think it's a really interesting point about instant gratification versus delayed gratification, and as you said, that kind of shift there is sort of worrying. Maybe we need to really look at that side of it.
Definitely.
Richard, do you want to add anything here on the sort of these attitudes to finances now that seem kind of embedded, I guess, as Harjit was saying?
Yeah, I mean, look, it's a massive topic, isn't it? My personal view, I mean, I share Harjit's as well about when I was young, if you wanted something, you saved up and you bought it. But the world has changed now. It's more of a consumerist society, isn't it? Fast fashion. There's more peer pressure, I suppose, through influencers and media and magazines, etc., to have the latest, greatest thing, whether it's, it's iPhones or tablet devices, or whether it's clothes or handbags or something of that nature. I know my own children are desperate to get the new iPhone. They've got a perfectly good iPhone now. The new one just lets them take slightly better pictures and does maybe a few more things, but it's not that much different. It's not worth another £1,000 really to go and get one, but they feel obsessed to get it. And I think the nub of the problem here is about financial education fundamentally, and the fact that consumers don't really understand that they need to save money in order to buy things. And Antonia, I think your product is fantastic about getting onto the housing ladder. Absolutely brilliant. Take people through that process. But similarly, the problem is in the BNPL, isn't it? Buy now, pay later. It's that instant gratification. Get it straight away and pay for it later. But of course, because it's 50 to 60 quid, people forget about it. It doesn't appear on an immediate bill that they get. And before you know it, they could have been out on a shopping spree and spent a couple of £100 that they can ill afford. Now, the other thing I'd say about this is that the majority of these buy now pay later products tend to be targeted at the younger generation, and those are the ones who understand less about how to manage finances, how to manage money, etc. We do annual research on consumers' attitudes to borrowing, and one of the most frightening statistics in it for me is the extent to which consumers understand how a loan operates. So in 2019, only 38% of 2,000 consumers were comfortable that they knew how a loan operated. 15% said not particularly well, I don't really know. And the middle ground of 47% were kind of like, yeah, I think I know, I'm not really sure. But the implications are dramatic, aren't they? If you take out a loan, you miss a couple of payments, you get a black mark on your credit profile, and that's it. You when times get hard, you'll struggle to get a mortgage, you'll struggle to get a car finance. You may, depending on the kind of job that you want to do, you may find that you're excluded from certain professions or certain industries because of your credit profile. And all because you got a bit carried away with buying some stuff online at some point. And, I'd argue maybe some stuff you didn't really need. So I think it comes back to education. Yeah,
absolutely. Thanks, Richard. And those stats you mentioned there are quite shocking in some cases. I mean, we've obviously talked a lot so far about kind of consumer awareness and attitudes and perhaps some problems that are arising from accumulating debt. But let's bring in sort of regulation at this point, I think. Now, there have been some kind of investigations and scrutiny of BNPL services since last year, namely by the UK regulator, the Financial Conduct Authority. And I was just wondering from the panel whether you believe that FCA regulations and rules should be more common knowledge among consumers. Richard, let's stick with you for now and find out what you think about this.
No, I don't believe that they should be more common knowledge amongst consumers. The responsibility sits with the lender. I am an authorised individual for the services that we provide. I have a duty of care to all of the consumers that ultimately we would service, and therefore it's my responsibility to ensure that they are dealt with in an appropriate fashion and that we treat customers fairly. We have full disclosure, advertising isn't misleading, etc. It's not for the consumer to have to go out and educate themselves about whether they should do that or not. So I think it is absolutely contingent upon the lender to make sure that they can inform the consumers of how the loan operates and make sure that they are dealt with appropriately.
Okay, and I think following on from that then, I mean, perhaps Antonia, you can sort of take this question, but do you think there should be more detailed and responsible ways of performing credit searches, sort of background checks, to ensure that buy now, pay later customers are able to make repayments?
Yeah, I think that sounds like a sensible solution. I think back to Richard's point that, it's on the lender to take the responsibility. If they're lending to someone who absolutely can't pay back, that doesn't seem a good situation to be in at all. I'd say though, as a positive to the demographic we're kind of talking about, our customers are between 18 to 39, and I've been really pleasantly surprised by how many are making sure that we're FSCS protected, their money's safe, that kind of thing. And so I think people do get a bad rep. I don't want, it's not definitely everyone, but the people who don't understand about this, what are the checks that are being done? I think there's brilliant things, on Fido, and people make it very easy. They're incredibly thorough, but from a user perspective, it is quite easy that you sort of take a quick scan of your face or your driving license. And so just again, understanding the implications of that if you can't pay back the loan. But yeah, I agree with Richard that the emphasis has to be on the loan provider.
Thanks, Antonia. And presumably, Harjit, you feel the same, that really it's the responsibility of the lender.
See, I have issues with the FCA around this. So it's agreed it is on the lenders. It is clearly, but the rules that are set out, like the TCF policy, and we've all been through the FCA stuff. It's like a tick box exercise. Like when you take a credit card, you get not that much paper which nobody reads. There's a great documentary on Netflix about terms and conditions. I think Amazon had something weird at the start in one of their terms and conditions that they wrote something in that nobody claimed for years. Like if somebody rang this number, they would have got £200 credit because it was in the terms and conditions and nobody ever reads it. Nobody ever rang that number, and that's what I look at with the FCA. Like this buy now, pay later thing, it's been going on for a couple of years, and the FCA still haven't really reacted to it. And I always think that the FCA are too slow and cumbersome. Industry's changing. FinTech is the future. Yet they're not really ready for that, and they still got this really, let's say, outdated policies. So part of it, yes, 100% is always on the lender. That's the regulation, but the regulator has to be more flexible and understanding of what's going on in the world and not reacting 5 years after the fact, just like the PPI stuff. PPI was sold for a very long time before the FCA made a call on it. It shouldn't take that long. It shouldn't take that long. It's all technology now. It's not like you have to go to offices and go through files and files of paperwork stored away. It is there. And I think that's where I sit. I agree, but the regulator does need to do a lot more, act a lot faster. And if they just acted a bit faster and made things a bit easier, because we all sit here and say, yeah, that we should educate the lender, the borrower, it's on us. But the framework that's given to us to show what we need to do to make sure we're all right with the regulator is long, and it doesn't make sense for the consumer. The consumer's not going to read 25 pages of terms and conditions. They're just not. So sometimes we're doing paperwork just for us as lenders, well, I'm not a lender, but as a lender, to tick the box so the regulator is okay. But no one's actually really thinking about the consumer. The question is, do the consumer understand it? Yes or no? And Richard's stats clearly show no. But all these firms are regulated, and the FCA said, yeah, they're all good, they're all fine. So I'm like, there's something wrong there. There isn't there. The consumer said, I don't understand it, but the lenders are saying we're okay to lend. So that's where it's disproportionate for me. Like the regulator does need to do a lot more and act a lot faster.
Yeah, if I just sorry, Antonia.
No, go on, Richard.
I was just going to say this is the one point that you need to put friction in the journey. So I think we're all used to be able to do something really quickly, just click a few buttons on our phones, and either a car arrives or a food arrives or books arrive the next day. But there's a point at which you want to say, are you sure you want to proceed? Yes. Well, are you really sure? If you haven't, because you haven't, you've skimmed through all these documents in like a fraction of a second, you should really go through it in a bit more detail. And I think there are scenarios where lenders potentially should try and introduce a bit of friction just to make sure that the consumer's done it. It's the same as if you're investing, actually. I mean, Antonia, I'd be interested in your view on this, but in certain categories of investment, you've actually got to got to answer a load of really specific questions and kind of get them right before they allow you to proceed to the next stage.
Yeah, absolutely. It's a real balance between making it not sound too scary, you're making a positive decision, but understanding the risks involved and reading through. And so probably before you invest with Nude, you're reading quite a long page, but we've taken the decision that's really, really important. I love the point about friction and positive friction. You mentioned about Monzo and gambling earlier, and that stop on, are you sure you want to proceed with this, I think is brilliant. The only thing I was going to raise was around, there's a really successful campaign, is a hashtag regulate BNPL, and it's on Instagram, you can follow it on Go Fund Yourself. I think that's brilliant. That's from the target demographic saying to the regulator, I've seen my friends, this isn't working. We need better standards of advertising. We need to protect consumers more. And I think a mix of industry and consumers saying it hopefully will mean that more happens in this space.
That's a really interesting point. And sticking with the regulator, I think when the FCA carried out its sort of scrutiny of BNPL, it did kind of raise the potential for consumer harms, I think is how it put it. So I was wondering whether buy now, pay later startups and fintechs have done enough, if anything, to acknowledge any of the concerns raised by the FCA and to sort of, if you like, reassure consumers that they're sort of taking that into account. Richard, have you seen sort of any evidence of that? Or do they need to acknowledge those issues?
Yeah, I think I've seen various campaigns that some of them have run that are starting to do that, but it's almost kind of self-selecting in some respects, isn't it? I think what they need to do is use their data to mine and understand those consumers that get into difficulty, and then do a read across to the rest of the application base that they get, maybe through different retailers that they work with, and put different processes in place. So if you are if you're selling an expensive good, I don't know, say you're selling Mulberry handbags to an older generation, chances are that they're more likely to understand what they're getting themselves into on a buy now, pay later deal, whereas an 18-year-old buying some tech or new pair of trainers probably isn't. And there's more potential for harm at that early stage, because the problem comes, and Harjit, you'll see this all the time, I guess, that somebody's life is monumentally messed up for 7 to 10 years because they've got this debt problem that they're trying to deal with. So the dream they may have of, I don't know, house, 2.4 kids, dog, Volvo, just immediately evaporates. I don't know whether people dream about getting Volvos anymore. It's probably Teslas, but you know what I mean.
Yeah.
Harjit, did you want to come in on this? And
I think it always feeds into this. Like, so I've had first dealings with Klarna because when we created the survey, we mentioned Klarna, and Klarna was very upset. So I've had dealings with them, and I understand the changes that they're making and trying to do. They're the biggest. I think the more pressure hits them. But and I look at it as a small startup. If you're a small company, we've got this great idea on a buy now, pay later, and you're going down this journey. If I don't need to be, if regulation is not my issue, then am I really going to build that in when I've got all these other problems to deal with as a fintech startup? If I don't have to do it, I've got other bigger problems to deal with. And I think that's where it's that kind of balance. And my issue with the FCA, it's you should be acting quicker. It's a problem now. Not we might get the rule change in 2024 and then they'll backdate all the fines, which will hurt some companies. The damage is done now. You need to act quicker. But ultimately, I think it is, for me, it'll come back to education. And I know like we've touched on that, it's on the lender's responsibility, but I do think just as we do maths and English, there should be a thing when you leave school about understanding what finance will affect your life. If you want to buy a house, if you take a buy now, pay later and don't pay it back, it will affect you. And something as basic as that, a lot of people don't understand that, they don't care. It's 60 quid, it's not going to affect it if I want to go for a mortgage. I have a good job, I earn good money, I should be able to easily get a mortgage. And they don't understand what a credit file is and why I need to have a good credit file. And some basics that should be taught well before university. It should be part of your GCSEs as you leave school. Because the thing about fintech is we're always going to find new and fancy ways of lending. Somebody's going to come out with something that's no one's ever seen or heard of, and a new way of lending money, and we're going to be back into this problem. We're going to look back at history and think, okay, what did we used to do? Let's stick that in an app and repackage it and treat it as something new. Like the next thing could be something like, I look at something like Provident who do doorstep lending. I wouldn't be surprised if there was an app created around the same kind of principle, short-term 7-day loans kind of thing, in an app that uses open banking. And then we're going to be back to this problem. Okay, it's not regulated, it's at the jurisdiction. Here we go again. And it is then that small part of the population that don't really fully understand the impact on finances, and that's where for me it's a bigger problem than just looking at fintech as a whole. It's finance and money makes the world go around. It's not you get paid cash in hand on a Friday and you've got to pay the milkman and the insurance guy's going to come knock on the door and whatever's left is your money. We're way past that.
Thanks, Harjit. And I know we're coming to the end of this panel session, and I want to kind of round off, I guess, by asking a question around something actually that you mentioned earlier, Harjit, which was that for the first time since August 2020, consumer borrowing surpassed credit repayments. That was recently announced. So I suppose, with the backdrop of the pandemic, perhaps that's not a huge surprise, but I just wanted to find out from each of you whether this is, positive or negative. So what does it tell us about the state of the economy and consumer attitudes to finance? Antonia.
Yeah, I think we've got a real challenge to kickstart the economy, and borrowing is part of that. I wonder though, I definitely know amongst my friends, lots of whom have been fortunate enough to keep their jobs, but they felt that actually they didn't need to spend quite as much during lockdown. They enjoyed, sitting on the sofa and cooking supper some nights rather than when they would have gone out for dinner. And they're now feeling, gosh, we're spending much more. Maybe there'll be a kind of rebalance as we all get kind of used to the sort of new normal, I suppose.
Yeah, absolutely. Richard, let's bring you in here. What do you make of what that tells us about the economy at the moment and people's spending habits?
Yes, I think the pandemic's shown us that there was a polarization of the haves and have-nots. And as Antonia said, there's a cohort that's done pretty well financially over the last 16, 18 months, been able to save money. And that's been seen in the economic reviews where people have been paying down debt, but equally there's a cohort of the demographic that have struggled. They've only been on 80% of salary. They've lost tips, miscellaneous gig working income, etc., and they've really struggled. I think the true test isn't so much about how much we are borrowing; it's the affordability. And it actually, if you look at the stats from the Bank of England, although lending has just gone above credit repayments this last month in May. For the last 12 months, it's been on a pretty significant decline. So I think the key metric is affordability. Affordability is still good, but again, you've got that polarization, and you don't get all of that data immediately. So I think time will tell, in truth.
Okay, thanks, Richard. And Harjit, let's give you the final word on this.
I think, like I touched on before, I think it's kind of worrying because it just shows the moment we're back to normal that majority of people need credit to live on. I think that's the most surprising thing. Yeah, we can talk about the economy and it's good for the economy and all that kind of stuff, but ultimately, if borrowing's gone up the moment that lockdown's over, it shows that people need to borrow to live a life that they want to live, and that's for me is a worrying thing ultimately. Just like I said, if you need to borrow to eat out and to go to work, that's kind of worrying. And the thing that Richard touched on, the biggest thing that I've seen is the gap has increased between the haves and the have-nots. If you look like last month, the last few months have been a boom in the housing market. Yet people are on furlough, yet people are not working, and there's all this kind of stuff. Yet we've seen more people buy houses, and it's if you've got the money and your job's good, then the government's helped you out in a big way and you can move further ahead. And the people who are on furlough, 80%, people who have lost their jobs in that time have gone further behind. That gap's just increased. And they're the two real big things I've seen over lockdown, and especially now, let's say with the lending increasing, it's just worrying that people are just that kind of attitude towards money. Stick it on buy now, pay later, stick it on the credit card. We're back to normal, we'll go out and eat and it'll just go on the credit card and it's fine. And easily just after 18 months to slip back into normal life, and we live a life in credit. That's just the way of the world at the moment.
Thanks, Harjit. There's some really interesting observations there, and I want to thank all the panelists, Harjit, Richard, and Antonia, for what was a really frank, I think, and an insightful discussion there. And it's obviously a very complex area. There are lots of factors at play here, and it will certainly be interesting to see what more the regulator does, if anything, to kind of regulate and scrutinise this part of the market. But again, thanks very much for your time today, and that's all we have time for. So goodbye for now.
Thanks very much.